Hello, this is Rachel from Kalkine Media. Please subscribe to our channel and press the bell icon for notifications for our latest videos. Today we're going to talk about 3 ASX ETFs that give investors access to US markets. An exchange-traded fund tracks an index, sector, commodity or other asset, but trades on the stock exchange just like a regular stock. ETFs can have all types of investments, such as stocks, commodities or bonds. These funds are beneficial to investors as they have low expense ratios and fewer broker commissions. Even as the ASX 200 consists of several attractive companies, investors' exposure to certain sectors such as technology does remain limited. It's where the exposure to US markets can help. Investors can easily access some of the best stocks globally via US markets using ASX-listed ETFs. Here are 3 such ASX ETFs that have lately gained traction in terms of price momentum or latest developments. However, one needs to do thorough research before taking any exposure, as sinusoidal market trends are evident. The ETF is among the most widely tracked funds globally. iShares S&P 500 ETF provides investors an access to the top 500 US stocks, ranging from Apple to Microsoft. The fund is managed by BlackRock Investment Management Australia. It seeks to match the return of the S&P 500 before fees and expenses, and issues a dividend on a quarterly basis. Investors can access the large cap US stocks via single investment and diversify their portfolio globally. The ETF is known to offer long-term growth opportunities to investors. The ETF gave an average return of almost 18% per year in the last 10 years. It's among the ETFs on the ASX with the lowest management fees at 0.04%. BetaShares NASDAQ 100 ETF is also one of the largest ETFs in the world. The fund tracks the 100 leading non-financial companies listed on the NASDAQ, including Amazon, Apple and Facebook. The NASDAQ mostly consists of tech companies, and tech companies are among the best performers on the index in the last 5 years. The fund gave a return of over 30% to investors in the past year. Over the last 3 years, the ETF gave an average annual return of 27.52% and 26.35% per year in the last 5 years. Investors have received an average return of 20.94% since its inception in May 2015. The fund has management fees of 0.48% per year. VanEck Vector's Morningstar Wide Moat ETF is not an index fund but can be termed as an active ETF. The fund invests in firms with a wide economic moat. It works with Morningstar to design a portfolio of 40 US shares with signs of wide moat. The fund's holdings include Pfizer and Boeing, such as those kind of shares. The fund has management fees of 0.49% per year. Investors have received an average of 20.38% per year since inception of 2015. If you like this information, please like, share and comment on this video and subscribe to our YouTube channel. Press the bell icon for notifications for our latest videos. For regular updates and information, log on to our website, kalkinemedia.com. I'm Rachel, signing off for Kalkine Media.